The idea of incorporating alternative investments into your portfolio can be exciting, especially when you see the significantly outsized returns realized by professionally managed portfolios that have successfully done so in the past, as we explored in our last video. There are a lot of options out there today that claim to give you that kind of exposure, some better than others. In this video, we'll explore and compare 6 of those options that you have available to you today. Let's do it. Welcome back to the most savvy individual investors out there. For those of you who don't know me, my name is Steven Spicer, and my goal is to help you overcome the significant risks to which the stock and bond portfolio leaves you exposed. Now, alternative investments can be much more complicated than just understanding that you're buying into a company when you buy a stock, or a company's debt obligation when you buy a bond. Unfortunately, most investors, though, don't even understand those basics, but that's beside the point. That added complexity is why with alternatives, there are high bar restrictions for you to get access. I don't know if I necessarily agree with them, but I do understand why they exist. So we'll divide this video into 2 categories: alternative investment options available to non-accredited investors, and those additionally available to accredited investors exclusively. In case you're not sure where you fall, the SEC defines an accredited investor as either an individual with gross income exceeding $200,000 in each of the 2 most recent years, or joint income with a spouse or partner exceeding $300,000 for those years and a reasonable expectation of the same income level in the current year, or a person whose individual net worth or joint net worth with that person's spouse or partner exceeds $1 million, excluding the person's primary residence. Now, just as a quick disclaimer, none of this should be taken as a recommendation or endorsement. This information is being presented for educational purposes. I want to help you see what's out there, realize there are more options as you strive to overcome these significant risks and flaws with the stock and bond portfolio. Check out my complete disclosures through the link in the description below. Also, if you're just getting started saving, I wouldn't worry too much about an alternative allocation. Just focus on getting your savings built up. But once you do have a good habit of saving and a decent amount saved, that's when these might start to make a little more sense for you. Alternatives have become increasingly more popular. We're seeing more and more ways to access them, even for non-accredited investors. But they should all come with a buyer beware warning sticker. This is one of those things where some unscrupulous actors could just slap the word alternative on the label, and many investors then wouldn't balk at the higher price tag. Just because an investment claims to be alternative does not mean it's a good investment and does not mean it should justify higher fees. In fact, an alternative claim does not even guarantee returns that are uncorrelated to the stock market, which is what we're trying to do here anyway. Okay, so with all that important stuff out of the way, let's start with those options that are available to non-accredited investors. The easiest way to gain alternative exposure these days would be through an exchange-traded fund. You can find ETFs that focus on various types of alternative exposure, including merger, arbitrage, cryptocurrencies, real estate, metals, risk parity, commodities, and so on. They're available through traditional brokerage platforms like Schwab, Vanguard, and Fidelity, and through investing apps like Robinhood, Webull, M1 Finance, and others. Now, as a practicing financial professional, I cannot endorse any particular fund or anything like that on a broad platform like this. So before investing into any ETF promising alternative exposure, make sure you do your research. Understand what their focus is, look at their track record, and make sure you know what their fees are. Due to the seemingly more complex nature of managing a portfolio of alternative investments, it can be easier for a firm to justify a higher price tag as far as the percentage fee they take from you on an ongoing basis. It's up to you to decide if that elevated fee is worth it or not. Now, there are also some modern platforms that have sprung up over the last decade or so to offer investors various forms of alternative exposure. Probably the most recognized of these platforms is our second option here, Fundrise. They allow investors to build a portfolio of private assets like real estate, private capital, and venture capital. Fundrise's site is full of information detailing their investment philosophy and opportunities they're seeing. Their transparency regarding the returns of their more than 500,000 accounts is refreshing. They boast solid average long-term returns, but also clearly show that some accounts end up in the negative even after 8 years of having a Fundrise account, which is probably true of most, if not all, the options we'll explore in this video. Fundrise is just the only one to explicitly show it. Their overarching returns do clearly show a lack of correlation to stocks and even public REITs, real estate investment trusts. Fundrise only requires a $10 minimum investment to get started. Another highly recognized platform is Masterworks. And no, I do not have an affiliate link for this one or any of these or anything like that. I wouldn't do that until I've thoroughly vetted something myself. On that note, I'm excited to explore each of these further in the future. Masterworks boasts more than 800,000 members and almost $1 billion in assets under management, a portfolio made up of almost 400 pieces of artwork. I love the idea of investing in a broadly diversified collection of real art, as you can here. But art can be difficult to value on an ongoing basis. They certainly try, but be aware of that difficulty when you consider their valuations, their returns that they've realized. Now, they would love for you to invest 5% of your portfolio in art through them. I certainly wouldn't do any more than that. Their minimum investment is $15,000, and they charge a 1.5% annual management fee. So now we've talked about apps that get you exposure to real estate, private credit, venture capital, and art. Another option available to even those non-accredited investors is a way for you to get precious metal or cryptocurrency exposure in an IRA. It's called I Trust Capital. As with any of these, this is not an endorsement, it's an observation and exploration of the increasing number of options out there. I Trust Capital allows you to set up an IRA, transfer in an existing one, or roll over an old 401k or the like. They will then allow you to easily buy and sell the most popular cryptocurrencies. Additionally, they have a platform that allows you to buy and sell physical gold and silver, as in your gold and silver exposure would not be through a security, derivative, future, or other financial contract. It's fully backed by physical gold and silver held in the Royal Canadian Mint. We'll get more into our investment philosophy here at Spicer Capital as we create more and more videos, but when it comes to what I call a chaos hedge, at least as things stand now, I'm a fan of a thoughtful allocation to Bitcoin as well as an allocation to physical gold and silver. In other words, not ETF exposure. I Trust Capital seems to be checking a lot of those boxes and with transparent and reasonable pricing. Their minimum investment is $1,000. I'm eager to check them out more in the future. Now, side note, based on our extensive research thus far, we prefer gold and silver coins minted before 1933, back before the government temporarily made it illegal to own physical gold. So if you're working with an advisor who has a similar philosophy as we do, they may be able to get you access to coins like that with your non-retirement assets. That's yet another way you can gain some thoughtful alternative exposure by working with an advisor who can help you with things like that. Now let's look at a few options that are primarily geared toward accredited investors. YieldStreet is the first platform like that comes to mind. They do have a fund that does not require accredited investor status, but most, if not all, investment opportunities on their site require you to prove that you have that qualification. YieldStreet provides you with probably the most comprehensive marketplace of alternative investment opportunities out there. It includes private credit, structured notes, real estate, art, legal finance, which is super interesting by the way, and more. Once again, we have a platform here with around 500,000 members boasting solid annualized returns that appear to be uncorrelated to the stock market. They do require a $5,000 minimum investment to get started. Now, if real estate specifically is your goal and you have accredited investor status, you might want to check out CrowdStreet. They offer crowdfunding of real estate deals. Their investment team curates these opportunities before bringing them to their platform. Once again, they have an extensive and accomplished track record, boasting around 800 deals funded with a nearly 18% realized internal rate of return. In addition to platforms like these, there are other options available to you if you're an accredited investor and you have an advisor that is open to helping you with this more intelligently enhanced diversification. It is much more rare that you will find an advisor willing to put in that work to help you find and vet those opportunities, but they do exist. Once you reach that investment status, there are hedge fund type specialty investments available to you that can provide you with returns uncorrelated to the stock market. For example, I was just exploring with a client a unique fund that invests in land where cell phone towers have been built. The cell phone companies who own the towers pay predictable leases for the rights to the land, producing a nice stream of income at a relatively high rate of return. That is, of course, uncorrelated with the performance of the stock market. Those types of opportunities come and go, and the specifics are different every time. But that's just another example of how the particular advisor you choose can make a big difference in your peace of mind long term. If you'd like to learn more about how we help our clients, please check out our site at spicercapital.com. In the future on this channel, we plan to dive into each one of these platforms covered in this video and more. We'll open an account, show you inside, show you what you can expect, and ultimately give you our unbiased opinion on how well they actually do help you achieve a more intelligently enhanced diversification in your portfolio. So if building a smarter portfolio to help you overcome the significant risks to which the mainstream stock and bond only allocation leaves you exposed, if that is important to you, I hope you'll join us. I look forward to seeing you in the comments and helping however I can. Regardless, I wish you all the best. Take care.